Welcome back to our weekly review of market sectors where we dive deep into the market capitalization movements between the different sectors. From July 14th to 19th, 2025, today, we're going to unpack the fascinating shifts we've seen across major U.S. sectors. Buckle up, because we've got some intriguing patterns and surprising turns to discuss. Let's kick things off with a look at the technology sector, which led the charge last week with a remarkable gain of 9.2% and a staggering market capitalization increase of $78 billion. The software and IT services sub-industries were the powerhouses behind this growth, each surging by approximately 10%. Hardware and storage weren't far behind, posting a weekly return of around 8.5%. Notably, the technology sector formed a bullish continuation candlestick pattern, signaling that the current uptrend is likely to persist. This pattern suggests that buyers are firmly in control and are pushing prices to new heights. Given the sector's strong momentum over recent weeks, we could very well see this positive trend continue, potentially setting new record highs in the near future. Shifting our focus to the industrials sector, we observed a modest rise, with a 3.7% increase in market capitalization, translating to a gain of $42 billion. The standout feature here was the formation of a bullish hammer candlestick pattern. This pattern typically indicates a potential reversal after a downtrend, suggesting that buyers stepped in to defend lower prices and push the market higher. The presence of this pattern, combined with the sector's positive performance, hints at building momentum and possible institutional buying interest in industrial stocks. In the world of consumer cyclicals, we witnessed an impressive outperformance with a 6.5% jump in market cap, adding $61 billion in value. The sector displayed a bullish engulfing pattern. It's a powerful reversal signal that occurs when a large bullish candle completely engulfs the previous day's bearish candle. This pattern strongly suggests that buyers have taken control, overpowering sellers and potentially signaling the start of a new uptrend. The consumer discretionary space seems to be gaining favor among investors, possibly reflecting improved consumer sentiment and spending outlook. The financial services sector also showed strength, gaining market share with a 4.8% increase in capitalization, equivalent to a $55 billion boost. Similar to consumer cyclicals, financials exhibited a bullish engulfing pattern, indicating a strong buying interest and possible sector rotation into financial stocks. This positive reversal could be driven by factors such as anticipated interest rate changes or improved economic forecasts that benefit financial institutions. On the flip side, the energy sector experienced a pullback, with market capitalization declining by 3.2%, or approximately $28 billion. The sector formed a bearish engulfing pattern, characterized by a long-bodied bearish candle that completely engulfs the previous day's bullish candle. This pattern suggests increased selling pressure and the potential for a short-term reversal or continued downtrend. Investors in energy stocks should be cautious and monitor for any signs of support or further deterioration in the coming weeks. The healthcare sector showed slight weakness, the marginal decline of 0.8% in market cap, translating to a loss of about $12 billion. The sector formed spinning top candlesticks, which are small-bodied candles with long upper and lower shadows. These patterns reflect uncertainty and indecision in the market, suggesting that healthcare stocks may be entering a period of range-bound trading as investors reassess the sector's prospects. In the realm of defensive sectors, consumer defense remained relatively stable, with a small 0.5% increase in market capitalization, adding roughly $4 billion in value. The sector formed hammer candlesticks, indicating that buyers are defending support levels and rejecting lower prices. This pattern, combined with the sector's stability, reinforces its role as a safe haven during periods of market volatility. The utilities sector presented a flat performance, the market capitalization barely changing, showing a minuscule 0.1% increase. The sector displayed doji and spinning top patterns, which are classic indecision signals. These patterns suggest low volatility and a lack of clear directional bias, reflecting the defensive nature of utility stocks and their tendency to move slowly in response to broader market trends. Moving to communication services, we saw a slight uptick with a 1.2% gain in market cap, adding about $9 billion. The sector formed small bullish candles and doji patterns, indicating a mild uptrend, but with caution. While buyers seem to be guiding the sector higher, small-bodied candles suggest that the momentum is not particularly strong. The basic materials sector posted modest gains, with a 2.3% increase in market capitalization, equivalent to a $17 billion rise. However, the sector displayed indecision patterns, including doji and small-bodied candles. This suggests a possible pause or accumulation phase, where market participants are reassessing the sector's prospects before making significant moves. In the real estate sector, we observed mixed results with high volatility. The sector's market capitalization fluctuated throughout the week, ultimately ending with a 1.8% increase, or about $11 billion. The presence of doji patterns and high volatility candles points to speculation and dominant indecision among investors in real estate stocks. Lastly, private companies, while less transparent in terms of daily market movements, which maintained a stable overall sentiment. The market capitalization for this group remained relatively unchanged, reflecting the nature of privately held assets and their reduced exposure to short-term market fluctuations. As we wrap up this week's sector review, it's clear that we're navigating through choppy waters. The mixed capital flows across sectors reflect a period of heightened volatility and investor caution, likely influenced by ongoing earnings reports and macroeconomic factors. The prominence of various candlestick signals across sectors provides valuable insights into potential reversals and range-bound conditions. For investors, the intersection of market capitalization changes and candlestick signals this week offers crucial guidance for navigating market turns, identifying sector momentum, and adjusting portfolio allocations. Keep a close eye on bullish patterns like engulfing and hammer formations in sectors showing relative strength, such as technology and consumer cyclicals. Conversely, be cautious of doji and bearish signals in more volatile groups like energy. Remember that defensive and stable sectors like utilities, healthcare, and consumer defense continue to serve as safe havens, but their flat or low volatility patterns suggest limited near-term upside potential. As always, it's essential to consider these technical signals in conjunction with fundamental analysis and broader market trends when making investment decisions. That's all for this week's sector review. Stay tuned for our next update, where we'll continue to unravel the complex tapestry of market movements and provide you with the insights you need to stay ahead in this dynamic financial landscape. Till then, happy investing. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.